Today, let's dive into the daily economic data for May 1st, where we'll unpack the bullish and bearish signals shaping market sentiment. First up, jobless claims. A drop here typically indicates a strengthening labor market, which is a positive sign for consumer spending. On the flip side, if claims rise, it could signal economic trouble ahead. Next, we have the S&P Manufacturing PMI. A reading above 50 suggests expansion, while below indicates contraction. If we see a strong number, it could boost investor confidence. Now, the ISM Manufacturing Index, similar story. A robust figure here often correlates with increased production and hiring, which is bullish for the markets. Let's not overlook construction spending. An uptick in this area usually reflects confidence in the economy as builders invest in future projects. Lastly, auto sales. High sales figures can indicate consumer confidence and spending, but a decline might raise red flags about economic health. Each of these indicators paints a picture of the economy's pulse, influencing how investors react. Keeping an eye on these numbers can help us navigate the market landscape effectively